All right. Good morning, everyone. Brad Roltkin here. This is the Fresno Bitcoin and cryptocurrency investors meetup. Today, we are talking about pools and farms with the goal of hoping to earn a little bit of crypto every day. This is kind of an area that I've been involved with and continue to be involved with. But I didn't realize that we hadn't talked about it here in the group. So, for a long time, I do coaching and some small group classes, as well as the meetup here. And we talk about that fairly often, but I didn't realize we hadn't talked about it. So definitely a good topic to discuss. Before we get into that, I want to do just a little bit of group house cleaning housekeeping, not cleaning, housekeeping, and kind of catching everybody up. For those here in the Fresno Clovis area, we met a couple weeks back on this 22nd for Bitcoin Pizza Day at Me and Ed's on Willow, and we had a great turnout. It was great turnout, and it was interesting to see that some folks were still made comments about kind of being cooped up with COVID. They're working at home, and how nice it was to see people in person, which obviously that was the case. And so there was enthusiastic support for meeting more often than once a year on Bitcoin Pizza Day. And so what we're going to do is we've got two more in-person meetups scheduled, one for July, one for September. And the goal is that, got a bunch of people. I think we probably had 12, 14 people show up, which I thought was great. And so we got those two meetings scheduled again in July and September. They're both on a Sunday about at noon. And so we're going to continue those meetings. If those go well, get good attendance, then we'll do it every month starting in October. We will continue these meetings on the Zoom meetings on a more specific topic. Usually about the first weekend of the month. If it's Labor Day or Memorial Day, we'll kind of avoid around those dates, but we'll continue to do these Zoom meetings. I did want to get any feedback on anybody that was there or that wasn't there. If you guys have any comments about meeting in person real quick before we get into the topic today. I know Elaine, you were there. I think Michael, I saw you in here. Anybody else? Any comments or feedback on getting together in person?
I personally really enjoyed it. It's great talking to people, hearing things that normally I just read online or talk to people on Twitter, on their spaces. So it was nice to just talk to actual folks from the Clovis, Fresno area about Bitcoin and cryptocurrency and what they're thinking.
Yeah, and I think it'd be hard to have, well, especially if at Me and Ed's or a place like that where we're kind of in public and don't have a private meeting room like we did before. Hard to have a focused topic or discussion, but better to meet and just kind of talk, and whoever you're talking to, and there's a different discussion. I noticed people had moved around as they talked to a group of people here, and then they moved to another group of people and continued a different conversation. So I think that we're good. So good. Anybody else? Oh, thanks, Elaine. I saw you in the chat. Good deal.
Would love to have attended, but it's a 3-hour drive for me.
Okay. Yeah, I can't do much about that. Unfortunately, yeah. So maybe down the road, if you're passing through or something, who knows on that, but at least we'll continue here. And the other thing that we can do is in the meetup on the event page where it talks about, today's meetup, there's comments. If you guys want to, ask questions or kind of follow up, we can literally have a conversation there on this meetup page. Or if you want to, kind of connect, if somebody asks a question about something, somebody else can answer, or, connect with that person, and then even privately message each other on meetup kind of thing. So good. All right. Let's go ahead and get started. Let me get trying to get all my screen straight here. All right. So
yeah, I was gonna say it's a 3-hour drive for me too.
Okay. No worries. That's what Zoom is good for, and so we'll definitely continue these meetings and kind of hit it from both ends. All right, so as usual, this is not financial advice. I'm not your financial advisor. We're just kind of talking about, topics to further delve into for your personal use or investing needs, that kind of thing. I do have my cryptocurrency certification, but that's not financial advice. I'm not a CPA, attorney, that kind of thing. All right, so pools and farming. So I want to kind of just kind of break these down for the difference. And anytime guys jump in and with a question or in chat, I'll try to keep one eye on chat, one eye on the other screen here. And or if you guys have links, feel free to post those in the Google Doc as well. Okay, so we're just got too many screens going here. Okay, so when we're talking about pools, we're talking about putting one coin to use and to work in a liquidity pool. This is, you can kind of think of this as similar to staking. If you've seen, even simple spaces like on Coinbase, you can stake, Tezos or, a number of other coins. You basically are tying up or committing one coin to put in this liquidity pool and then earn, equivalent of interest on what goes on with that coin. You only have to do it, a single coin, and there's no what they call impermanent loss. And we'll talk more about that in a second. So the pools are very easy to do. For the most part, there's no set time period that you have to, commit your coins or tokens to, like a 6-month CD or, a 1-year CD or anything like that. There's sometimes like an early withdrawal penalty if you pull out within like the first 48 or 72 hours, just because they don't want people jumping in, jumping out, that kind of thing. But it's maybe a 0.5% or 1%, penalty kind of thing on that. So it's not, if you have to jump out and use the funds for something else, you can do it. Just a few weeks ago, I have a client that I was helping. He's had some funds in the pools and the farms at PancakeSwap, and they updated their pools and farms. And now the one for Cake, which is their kind of proprietary token, they do offer a higher return if you lock up the funds for a set amount of time. So that was kind of a new thing for me that just, popped up in the last month or so. So maybe they're kind of moving that way a little bit. Allegra had a question here. Go ahead. Okay, go ahead and unmute. Yeah.
Hey, thank you so much.
Sure.
I'm a little familiar with staking. Is when people say they're, that they're staking something, they mean that they're using a pool to stake it. Is that correct?
Not necessarily. The staking is kind of an easier or a simplified process, although the pools aren't that complicated. But the staking is, there's more places you can do it. Even like in the Clever wallet, you can stake your Tron, and it's just a matter of committing, a certain amount of Tron to stake, and kind of lock up. Well, usually not even a certain time. Some of them might have that, like I mentioned, the Pancake Swap is moving that way. Others might too, especially as it's, well, the interesting thing is if you didn't commit to a time period, you got about a 5 to 6% return, annually, APR, which in crypto and to me is not a whole lot. It's, I mean, that's just not very much. Where if you committed to a year, the return you got was like 131%.
Okay.
Which is much better. Go ahead.
And can you, when you're using pools, can you stake less than one coin? Can you stake like a fractional coin or anything?
Absolutely. You can, it'll show you what your balance, like what you have, and you can put in 0.001 of a BNB or whatever.
Right.
Yeah.
Are there any restrictions on taking it out or anything? Like you don't have enough coin to be able to take it out?
Not usually. There might be a situation where, the fees you pay, like you wouldn't want to put in 17 cents of BNB when you only, the fees are 12 cents for a transaction. But other than that, no.
Right. Okay.
Generally.
And can you use pools and staking in pools if you have your funds primarily on a hardware wallet, or do you have to have a software wallet?
No, generally these are a DeFi. So there is ways you can use a hardware wallet with like MetaMask. So there is a way. Oh yeah, I don't want to say no. It's another step or two, which is okay. But for the pools and farming we're talking about today, this is kind of in the DeFi space. So we're talking MetaMask or the Binance wallet or the Trust wallet, that kind of thing.
Okay.
So,
Thank you so much.
good. Sure, absolutely. Anthony, you had your hand up. Go ahead, sir.
Yes, just had a quick question about, as far as you're aware, do you know if when you stake in a pool or if you're doing farming, if you have a similar issue to staking on an exchange where they just found out about like Binance, where if they become insolvent, say like the person borrowing your liquidity becomes insolvent and can't pay it back, does that risk your coin at that point?
There's definitely risk there. We're dealing kind of with a smart contract. When you put your funds in, you're interacting with a smart contract. So those that control that, could definitely, pull something shady, that kind of thing. I always stick with the larger players in the game. So for like the BNB chain, PancakeSwap is the big one. There's a lot of these little ones that'll offer some crazy returns, but that's where the risk comes in, that like, here today, gone tomorrow kind of thing. So I would definitely stick with the larger ones. But with crypto, there's always a risk. And so I try to minimize that by sticking with the bigger players on whichever coin that I'm with.
Brad, can you mute Lens? Lens
Is
is where the noise is coming from. Yeah, thank you.
Is that where it?
Yeah,
Okay,
it's coming,
good.
it's coming from Lens. Thank you.
Thank you. I couldn't quite tell where that was. Appreciate the help with that. Okay. All right. So moving on to Anthony, were you done? You had your hand still up. Just want to make sure.
Sorry, that was accidental. I'm not sure.
Okay.
Thank you.
Okay, no worries. Let's see, we got him there. Okay. Okay, so moving on to the farming. So when we're talking about farming, we're actually working with two different coins. And so you're going to choose, which two coins that you want to jump in with. And, there needs to be a farm that support those two. You're not going to find a farm that support like, well, who knows? I won't even say that because you can do almost anything with crypto. But the other thing to keep in mind is that when you have your funds locked up in one of these pools or farms, you still have exposure to the price going up and down. So you don't want to just jump into some crazy coin that you don't think, don't have knowledge of, or you don't think they're going to have a very good future just because they're paying out 400% interest, type of thing, because the coin could go down 5% every day or drop 50% next week, that kind of thing. So that's one thing definitely to keep in mind. Let's see, Brandy, his hand up. Go ahead.
Hey, Brad. I'm new in this group, but I would just like to ask the question about when you say farming, are you referring to the hardware farming, or are you guys referring to yield farming? And if it's a yield farming, how do you differentiate yield farming from the regular mining?
Yes. Okay. That's, good point. So we're not talking about mining with graphic cards or ASICs or that kind of thing. There is a term called yield farming, which is not what we're talking about either. And that's where you borrow funds, at 3% from somewhere, and then you invest them and earn 6%. And you kind of earn that yield between the 3 and the 6, type of thing. So we're not actually talking about either of those two things. The yield farming might be an interesting conversation down the road. I haven't gotten into that, mostly because I don't want to get involved in borrowing, any funds kind of thing. But I know people are making, a couple bucks here and there on that for sure. Does that answer the question, or did it make it more confusing?
Well, it did. I guess a follow-up question is, so which particular type of farming are we referring to then?
Let me go through a couple more slides and show you a few things. And we'll look at PancakeSwap specifically. And then maybe,
Okay.
hopefully that'll answer the question, but jump back in if it doesn't, or if it makes things more complicated.
Yes, thank you. The slides will probably answer. Yeah.
Yeah, good. Okay. So back to farming again, we're using 2 coins. In order to start, we have to put those 2 coins together on the DeFi exchange to create a liquidity token. And then you actually put that liquidity token in the farm. So that liquidity token represents the 2 tokens. So for example, BNB and Cake is a popular one to farm on the PancakeSwap, because BNB is the chain that it's on. So obviously people are using that. And then Cake is the kind of proprietary token for the PancakeSwap exchange. So there's a lot of transactions that go back and forth through those. So those are the ones I like to get involved with, just because there's a lot of transactions there to make money on. Because what we're actually doing is, it's like the exchange center at the airport. We're exchanging pesos for euros, or pesos for dollars, or whatever, and we're putting our funds to use in that process. And the more people that go through and exchange those tokens or coins back and forth, the more we earn in fees, that kind of thing. So you do stake that liquidity token, and then when you come out of the pool to get your money out, then you take that liquidity token out and split it up back into the 2 different coins or tokens. And that's where we do run into a risk of impermanent loss, which how this works is, when you put the 2 coins together, you put them in 50-50 in value. So, say we're doing the BNB and the Cake, and we're doing $1,000 worth altogether. So you're going to do $500 in Cake and $500 in BNB. And then we put that in, and away we go. But what happens is, tomorrow, next week, next month, BNB might go up, Cake might go down, vice versa. Maybe they both go up, whatever, but they both go up at a different rate. Like Cake might go up 10% in a month, BNB might only go up 5%, that kind of thing. So when you pull your funds out of the farm, you still pull them out 50-50, but depending on where the price goes, you might end up getting less BNB back, number of tokens, versus the number of Cake that you put in. So maybe you get less BNB, but more Cake, because the price of BNB has gone up versus Cake. Does that make sense? I know that there's got to be some questions or confusion on that, because you really have to think about it like, okay, wait a minute. You put your $1,000 in, and then you get it back, but it's like you're getting back $550 worth of BNB and $450 worth of Cake, if you just looked at it that way. But the actual value at the time you're pulling out is still 50-50, but it might be a different number of tokens on each one of those. So if you're worried about that, that's something to consider. I look at it as, I'm into crypto and into the pools and farms long term. And so I'm hoping they're going to go up. Maybe, obviously they're not going to go up at the exact same rate. And so I might get, but, hopefully they're both up down the road, and that's good, good for us, type of thing. So, okay. And let me just show you a little picture of what this means when you put those together. So here's an example of NAR and BNB. So we put those together to create a liquidity token, which is this NLP. And then you stake that into the pool itself. And then when you take it out, you do basically the reverse to get your NAR and your BNB back. We talked about the different exchanges. Uniswap is the big player for Ethereum, PancakeSwap for BNB, and then I've been playing lately with Crow, which is the crypto.com. Their proprietary coin, and VVS Finance is the big player on that chain. And generally on these, the older the exchange, and, the longer they've been around, the lower the rate of return, because more, people keep plowing their funds in, and then so you're splitting that same amount of fees amongst more people, and so our individual returns go down. So I was able to jump in VVS finance and with Crow, and then the VVS coin, which is the proprietary one for that exchange. And at the time I was making like 1,400% annually, which works out about 4% a day. So that was pretty good. But it's since come down. I think it's a little under 100% a year right now. But I'm, again, this is long term, so I'm just keeping it in there and letting that ride. Let me show you this example of the currency exchange, like I talked about, a second ago. So in the farms, what we're doing, it's like we're giving this guy who runs this booth, $1,000 in pesos, $1,000 in US dollars, and then letting those get put to work when the planes come and go, and the people swap from, plane is coming from Mexico, they're probably swapping from pesos back to dollars. If it's going to Mexico, they're swapping from dollars to pesos. But every time that exchange happens, there's a fee. And so, maybe we have 1% of the total amount in the farm. So we make 1% of the fees, or 1% of the 80% of the fees. That's our cut, or whatever it is. So that's on the farms. That's usually what's going on with our funds. It's like, where do these funds go? What are they doing? That's usually what's going on with them. The liquidity pools, where it's just the one token, they may themselves kind of turn around and use our funds in one of these farming kind of operations. Who knows? You can read more about it. Obviously you want to do your research, but that's generally what's going on there. Next screen here. When you go into this, you want to have a little bit of strategy. So you've got your regular coins, versus the stable coins. And so, like when I started with BNB and Cake, I anticipated BNB and Cake going up over the long term, and so I wanted to have a position in both of those coins. But while I did, I wanted to put them to work so I could make a little percentage each day type of thing. But I was exposed to the volatility of those coins, which potentially might and obviously they do go up and down all the time, where using a stable coin with one of these pools or exchanges might be part of your strategy if you're looking to get income out of this. I had one client I was working with where his father, he was putting some of his funds into crypto for his father, and his goal was to earn $500 a month from his father's funds in order to pay for whatever his retirement age type of thing. Father needed, medical, food, whatever expenses, that kind of thing. So if you're looking for income, you may not want to rely on, BNB or Cake, because they may go up and down. All of a sudden, the next month he needs the $500. Well, you're only going to generate, what you generated is only worth 350 US dollars kind of thing. So you might want to, consider a stable coin if you're looking to get income out of this. Unfortunately, with the stable coins, there's usually less return, but that's something you can kind of balance back and forth. Another thing to look at is when you're in the pools and the farms, you may not earn your your earnings in one of those coins. For example, on PancakeSwap, you can stake a number of different coins, but they all pay the rewards or your earnings in the Cake token. So you might put in like that MAR or whatever token we had on the screen a second ago. You might have that in liquidity pool, but they pay your earnings in Cake. So then what you do is you go in once in a while, maybe every 2 weeks, once a month, whatever, and what they call is harvesting those earnings. And what that does is takes those earnings and puts them into your wallet. Just, so it's like, it's like kind of like getting your paycheck every 2 weeks, but you got to hit that harvest button to pull those funds out. There's some pools and farms that will automatically restake those earnings. So they're not all automatically like a bank account where we earn interest and that interest becomes part of our principal automatically. But that's where the restaking, that term comes into play, which I like because then I don't have to babysit and hit the harvest button every 2 weeks or every month or that kind of thing. So just something to keep in mind there. I think we had Edward his hands up. Go ahead. I'm going to switch over and share a browser here and we can look at a few examples. Go ahead, Edward.
Hello.
Yes.
Okay. My question is, if you wanted to purchase Bitcoin or Ethereum, 50,000 or more, where is the cheapest place to find it? I've been researching online and see OTC information and stuff like that. I'm trying to find the lowest fees possible, and I want to send it to my own cold wallet or a different address. Now, I've seen some where you can send it to their wallet, but then you're going to incur another fee sending it out of their wallet. I want to send it directly to my wallet.
Oh, okay. So you don't want to buy it on an exchange and then have to move it to your own
Correct.
wallet?
If possible, yes.
I think those two things, the lowest fees and moving it to your own wallet directly are going to be kind of mutually exclusive. There's a service called Simple Swap. Let me actually share the screen. I'll do this. I don't want to, we'll sidetrack just a little bit here to cover that question.
And I'll be interested in both ways. Then if it's going to be, I can compare the two.
Yeah. So this is simpleswap.io. And what you do here is you can send one, whatever coin or token up here, like the default is Bitcoin to Ethereum. And so they give you an address to send the Bitcoin to, and then you supply an address to send the Ethereum to, directly goes, directly to that wallet. I don't, you can't buy it with US dollars through this service, but this is one way to get those fees or, whatever crypto straight to a wallet. But if
Okay.
you're,
Yes,
because
I
you need
would
to
be-
buy it from somewhere with cash, right? US dollars.
Yes, either a wire transfer or a debit card or something. Yes.
Yeah. Anybody else have any suggestions on the lowest fees? With that amount, I don't think the fees aren't going to be that much if you buy it on an exchange type of thing, especially in that volume, the fees are going to be lower than if you bought $20 worth type of thing. So I would just, probably Coinbase is probably not the best one, but maybe like Binance.us. You can link a bank account to that, or you can use a wire transfer. Usually they like the wire transfers over $10,000 or so, and it goes pretty quick.
What about Coinbase Pro?
Fees should be lower there. Yeah, and if you already
Okay.
have that link to your bank account, so you would buy it on Coinbase Pro, and then send it to your cold wallet.
You might try Strike.
Okay, what's the URL for that one?
Strike, STRIKE.
Is it .com, IO?
I don't know. It's an app, and
Oh.
you can apparently buy it there. Strike.
Strike.me.
That might be it. Right? Strike. Yeah, that's it. And you might be able to make your transaction on Strike for minimal, if any, fees. That's their thing. That's one of the things they're talking about, is you can buy it and sell it, and it doesn't cost anything. I don't know how they make their money, but I'm just saying it's something to check out and see if
Strike was adopted by Venezuela and another South American country as their means for allowing their population to use crypto instead of the country currency.
There you
Good.
go.
Okay, and see that's just a demonstration of the power of our group is we all have different information and have experienced different things. So thank you for helping Edward out there. Great.
Yeah, thank you.
All right, let's see. Let's go to Allegra, and then I don't know if Brandy had your hand up or not. We'll go back, but Allegra, go ahead.
Sorry, that was a mistake on my end.
That's okay. Sorry about that. And I apologize. My upstairs neighbor is crashing around. So if you hear noise, it's because he's doing construction. My apologies. So please keep me muted.
No worries. No worries.
When you were talking about restaking versus harvesting, was that specific to pools or to farming?
Really both.
Okay, so you can do it in both. That makes sense.
Yeah, really both. And I'm going to show an example here on the VVS Finance. But okay, so let's, I'm going to start in PancakeSwap just to kind of see where we're at, what we're talking about. So, you may have, you may have used this to trade and swap back and forth, BNB to cake, like I was talking about, or BNB to BUSD, that kind of thing. But what we're talking about today is going to be under the Earn tab right here. So we've got the farms and the pools. So we'll start with the pools here. And by default, we're sorted by the hot ones, which are, the more popular ones. And so here's where you stake, cake, and then it doesn't say earn, but we earn cake. And so this is the one I was talking about at the beginning that is kind of new. So if you have a flexible, where you can kind of jump in and out and you're not committing, you get the 5%. But if you lock the fee for a set amount of time, we're up to 110%. So let's kind of look at that. Let's see, here we go. All right, did this ROI calculator come up on this sharing screen? Sometimes these windows don't share. You seeing it okay? Okay, thanks, Michael. Okay, so the option here is flexible, and if we put in $1,000, it shows how much cake that is. If we stake it for 1 year, this is what we can expect to return. So obviously that's, right, that 5.18%. If we stake it for, 7 days, that's what we're earning, 5 years, that kind of thing. So let's look at leave it on the 1 year there. And then if we switch over to the locked, and we do that same $1,000 for 52 weeks, or 1 year, now we're earning $1,100. So obviously when it's over 100%, we're earning, we're basically more than doubling our funds in a year. So the one client I was talking about, I kind of didn't like this as far as committing, but he had has a chunk of change in crypto and had an amount in cake already that we pulled out of the other one. And he's like, hey, I don't need that, those funds for a year. We might as well earn, the most we can. So we put those into the 52-week. And like I said, I think it was 131%. Then I'm not sure if I would expect that would go up and down. I don't think it locks that rate in, especially in crypto. I can't see anything locking for a year. So yeah, any questions on this so far? Does that make sense?
Go to flexible 1 week.
Okay, flexible, 7 days. Okay, so you earn 99 cents on $1,000 on there. Is that what you're looking at?
Yeah.
Yeah, so it doesn't seem like a whole, again, 5% to me is like, that just doesn't get me excited, kind of thing.
Yeah, that's not good at all.
Yeah.
Not in this pool.
Right. Now this is cake. Let's look at some of the, or if any other questions on this here, then we'll look at some others.
Yeah, Brad, I'm curious, when it's locked like that, if you remember back in the CD days, you would lock up money in a CD for a year or 3 or 5 years, and there was a penalty if you took it out sooner. Is there any way that when it's locked, that you can end up getting that? But what would be the penalty on that?
Yeah. I looked at that real quick after I set his up, because I haven't locked any of my funds for 52 weeks. I can tell you that. And it basically sent a message that was like, okay, your funds will be available in 364 days, 22 hours or something like that. And I didn't see hey, I need the funds now button type of thing. So I would, I'm sure they've got more info somewhere, on here, but I kind of like to just jump in and play with them. And I'm not big on, reading paragraphs and paragraphs, which we obviously should do, kind of thing. Okay, so let's look at some other ones here just to kind of see what we're looking at here. So here's another one that's 100%. And this is, this is the other way. So this one, you stake cake and you earn CHR. Does anybody know what CHR is? So that, I consider cake to be, fair. It's not a stable coin, obviously, but it's large enough that it's, it's not some fly-by-night coin in my perspective. So the CHR, I have no idea what it is. It's the number, it's ranked 175, which is not bad. Let's see, so if we look for all time, I don't even know how it's been around.
What does the ranking mean? Sorry.
Yeah. So let's go to the home page here for CoinMarketCap. If you guys haven't seen or used this before, I consider CoinMarketCap to be the place to start when doing anything with crypto. So, it talks about the market cap, and it's literally, Bitcoin is the #1 market cap, currently $565 billion. So it's #1. Ethereum's #2. We go on, down accordingly. And so that 175 is out of, they currently have 19,730 coins or tokens listed there. So that 175 is much closer to the top than it is to the bottom. Again, I don't know what it's about, but you can search for any coin here, either in this, putting in the symbol, or you can search for the name. And then once you get on this page, it's got a link to their website. Sometimes more than one website, a link to the white paper, obviously very important. That's kind of the story about what they're trying to do, their goals, their mission statements, that kind of thing. Here's the contract address. So it's showing us that it's on the Ethereum chain. Sometimes there's more than one. So they also have it on the BNB Smart Chain. So, everybody likes the graph to see, the ups and downs of the last day, the last week, that kind of thing. But the one that I use the most is this market tab right here. And what this does is it shows you where that coin or token is traded. Because usually, hey, I heard about this. My buddy at work was telling me I got to buy this coin, so where do I buy it? And so this is where you get your answer. So when you see Binance here, this is Binance.com, which unfortunately here in the US, we can't use, at least not very easily. Look into a VPN for more info there. But KuCoin is one that we can use. And so if you want to trade the CHR for USDT, that would be a decent one to use. Generally, you want to use an exchange with a coin pair that's closer to the top of this list, because there's more volume and better, you're going to get better prices and quicker execution than if you scroll all the way to the bottom. And here Poloniex barely trades any percentage, that kind of thing. Where if you look at Binance at the top, their volume is 22% of all the volume traded for that coin, that kind of thing. So that's that's what CoinMarketCap is about. And I mean, they've added all these other things, NFTs. Well, you can put in like put in your portfolio and then kind of track it here if you want to do that. But I primarily use it to research the coin, find out what's going on, links to their website, that kind of thing. Anybody else using it for anything more than that, or found any other little tricks or secrets, on that site?
I use it for a lot of stuff. What I did, I just recently did a spreadsheet on all the DEXs. And I went through, I downloaded the entire list of, it's now 217 decentralized exchanges. And then I went and I clicked on every single one of them, just like what you're doing today on Pancake. And I looked at every one of the protocols.
Okay.
It's very, very interesting research. So this is a very powerful website for a lot of research in a lot of different ways. They have a lot of articles. When you were talking about doing research earlier, we were talking about that. If you go to the top far right, you'll see Learn. And in there's just all kinds of stuff, just endless. A lot of information on this website.
Okay. Oh, holy cow. Yeah.
It's unbelievable. I mean, this is a encyclopedia, Wikipedia of all of this issue. It's all here.
Okay.
Very
Cool.
powerful. The other thing, if you want to just look at the top again, another way that you can really research, you go currencies, I think. Yeah, cryptocurrencies, right there, click that. And then you go categories. Click that. Now you look at all these categories down on the left. But you got all those categories down there: yield aggregators, yield farming. That list is mind-boggling, and as you dig into that, really drill down on it, you get one hell of an education.
Wow. Okay. Yeah, and this is a way to narrow down when you're searching. Okay. Yeah, awesome. Thank you for sharing on this.
Yeah, it's powerful. Very, very powerful.
I like this one, the Unfederal Reserve coin there. Okay.
I spent hundreds of hours just on this website alone, digging and drilling down on all the different categories.
Okay. And you mentioned on that spreadsheet of the decentralized exchanges.
Yeah.
And so what kind of fields do you have in the spreadsheet? Or, what kind of information are you tracking? Oh, are you there? I think, did he drop off? Oh,
sorry. Somehow
you got muted there. Yeah, no worries.
So I track, are they US or not? Because a lot of these centralized and decentralized, you can't access them from the United States, like Binance. But Binance, of course, does have a Binance USA, but it's not at the top in ranking. But so I have taken the time to figure out which protocols are available through US or not. And then what type are they? Do they have pools? Do they have farms? Do they have pools and farms and other kind of stuff? And then, of course, how many markets? So how many different currencies are available? Like Uniswap version 2 has 1,300 currencies. So the amount of currencies that are available on the different protocols is interesting for my purposes. But then also, how many bridges do they have? That's another, as you know, long conversation. Today, there's issues of bridging between the different chains. And so various protocols will bridge between different currencies and different exchanges. So how many bridges do they have? But then I get into what I've created, and that was my main reason. It's part of what you're doing today, actually, Brad, is I have categories here where I took the time, took me like 4 days to do this, where I have columns that say, what are the returns in the pools and in the farms? So like the top one that I have right now, PancakeSwap, has a return of 3,800%. But sure, there's only $1,000 in that pool. But the thing is, right? And then there's the issue lock or unlock and all that crap.
Yeah.
But then what I did is I, like, for instance, this particular one, I say I have different columns. I have 7 different columns where the highest rate of return for the different pools. This is genuine farming going on. That's what I was looking for. Is I wanted to create, and it's sorted this way. Yeah, I have it sorted by the protocols that have the highest returns in their pools. And therefore,
Right.
if you're moving on a 7-day period, in, out, in, out, in, out, you actually can make one hell of a return. But you have to be very, very careful about how you do it. So those are some of the categories that I have. And then, of course, volume 24 hours is really important. And then I got what year it was launched. And you know that that's important to know, well, how long these people been around.
Exactly.
And very often they've only been around for a year. Like you said, it's true. All of this stuff is so new, it's mind-boggling.
Right. Or they've only been around 2 months, and there's no track record at all. Okay.
Yeah, that's right. Highly volatile.
Yeah. Maybe let's you and I kind of talk offline at, after the meeting or something. And this, it sounds like you have some good information for a part 2 of today's meeting. So let's work on that. I don't want to explode too many people's heads today on this, but it sounds like you've got some awesome info there.
Yeah, sorry.
Yeah, no. I love you guys jumping in because you guys know more than I do, and I just want to try to get everybody sharing what we've learned or know, with everybody else. We can all learn from each other. Okay, so let's get back to this, and I know we'll kind of get some questions here. So back at the on this pool on PancakeSwap. So this is an example of where you put in your cake. So you stake the cake, but you earn the CHR. So when you do that, there'd be a button there, and you'd come in every once in a while and hit the harvest button right here. And then it would move that CHR to your wallet, and then you could do whatever you want with it, that kind of thing. So it looks like a lot of these are staking. They want you to put your cake to work, but they'll pay you in different tokens. So let's sort by APR and see what that does. These are live. Wow, it looks like they just don't have as many as they used to have. It looks like they've dumped them out.
They're all in the farms.
Yeah.
Pancake has loads in the farm, not in the pool.
Yeah, but they used to have loads of the pools. I mean, like,
oh, okay.
Like probably at least 100. I mean, we're looking at 6. This is like nothing. Here's the finished one. So these are the old ones. Like I was talking about, they updated. So these were the old ones, and yeah, these kind of go on and on. Yeah. Okay. So but obviously we can't do any of those.
So you should mention, Brad, that these things come and go. They don't stay forever.
Correct. And some of the tokens probably go quicker. So where these guys, PancakeSwap, I would trust that they would not start a pool or a farm on some flaky token. But if you use some, little decentralized exchange, they might be more apt to do that. They might even be connected with some of the coins or tokens, that kind of thing. But you want to look at, the number of stake, how much is staked here. We can sort by total staked, which to me is important. There's, 176 million cake here, all the way down. Oh, these are pretty big. But like Ray mentioned, if there's $1,000 in one farm, that's like nothing. Anyway, okay, so let's move over to the farms, see what they've got there. So we're gonna look at the live ones, the hot ones. So here's the cake BNB, and the current rate is 28%, so that's a little better. Liquidity 165 million, so that's good. And then you're gonna earn cake here. So you're gonna put your cake and your BNB together to create a liquidity token, deposit that liquidity token into this farm, and then you'll start earning the cake, and then you can harvest it every once in a while. You don't want to do it too often because, you know, you're going to get charged 12 cents, 17 cents a a transaction, that kind of thing. But you don't want to just leave it sitting there too long. You know, say you put $1,000 in there and you've earned $300 in cake. Well, probably better to pull that cake out and put it back into the farm to earn, type of thing, as opposed to just letting it sit there. So we've got BNB. Now here's an example. This is BUSD, which is a stable coin. It's Binance's stable coin and BNB. So for this one, the rate is going to be lower. Looks like there's a lot more people in here, almost not quite double of the other one, because the BNB or the BUSD is a stable coin. And, you know, you can kind of put those funds to work knowing that they're not going to drop in value, at least related to the US dollar. Again, you're going to earn. Now, see, this is a third coin. So you're putting BUSD, BNB to work, but you're still earning cake. So, and that's going to happen a lot. And that's why they have the token. So they can pay you in that token. Can that CHR? Still don't know what that's about here. Liquidity here is only 2 million, you know, 600,000, smaller amounts, 200,000, you know, 81%, you know, that sounds like a great return, but GMI, don't know anything about it. You know, it might tank, that kind of thing.
What's a good level of liquidity to look for, I guess? I mean, obviously, you know,
yeah, it's just the bigger the better. I mean, on here, I would, you know, look at, I mean, there's kind of a gap. You've got these top two, you've got, you know, hundreds of millions, and then you've got just barely you know, a couple million, just under a million kind of thing. I mean, as long, you know, if there's you know, 3 million here, that's pretty decent. But it's all relative too, because there's, you know, this is a more popular chain type of thing, where let's jump over to the VVS Finance just to compare. So I'm actually logged in with my wallet. So I'm going to go to the earn here. We can look at this. So again, live sorted by hot. And this is the one that I'm involved in right now, is the Crow and the VVS. And I'm earning the VVS. So these are my rewards. And so I could hit the harvest button and those funds would go back into my wallet. So what I do, and yeah, this is down. This number is, this is my total, what I have in it right here. And that was, I had at least another digit on there in the past, but that's part of fun of crypto. But looking here, we've got, let's see, we're sorted by hot. So here, 147 million, 149 million kind of thing. But, you know, keep in mind, this is a smaller chain. And so there's, you know, just not going to be the same levels of BNB, but there's still, yeah, 9 million, 1 million, another 9 million. Yeah, but these, you know, so relative to these other ones, you know, when you see 300,000, you know, that would be interesting. You know, I would.
It's interesting, Brad, if you sort this one, sort it by liquidity, and then look at it by liquidity, then sort it by APR. So now scroll down just on liquidity and just look at how those numbers drop as you go down this particular protocol, and just see how the numbers will drop.
Yeah, so right here we're into 9. Yeah.
But then as you go down, also look over to the left and look at the or right, sorry, look at the right. Yeah, look at the APR on it. So as the number goes down, the APR goes up.
Right. It's generally inverse relationship, because more people that put the funds in, then the more the fees get shared across.
Yeah. And so what the guy asked a second ago, it really depends on you as to how you want to play this game. There's so many different strategies.
Right. Now here's one.
So, but now sort, and I'm sorry, Brad, sort it now by APR and just look at it that way. And look at the high APRs and go down that way. It gives people a better understanding of what's here. When you sort it liquidity, then sort it APR, and look back and forth, you begin to really understand the percentages and the amounts of money in the pools. And then, yes, what you were just about to do, then go over to, let's look at what the currencies are that are involved.
Yeah,
And
well,
that's how I study them.
This one jumped out at me, you know, 3.53%, but these are both stable coins. USDC and TUSD. So, you know, that your value is not going to go up too much, but you're also not going to make a whole lot type of
Right.
thing. So that's the other end of the spectrum there. Okay, so now let's search by APR.
And just start right at the top. Just look at that return, 293. But also look at, there's only $230,000 in it.
Yeah,
Okay?
yeah,
And so the amount of money that's in it decreases as the APR goes up. But there's many different strategies as to how to do this. If you're doing seven day kind of stuff, that's why I asked you on the other one, go to the 7 day. Because if you're day trading, right? And I know you're long, you like hold, right?
right.
And so there's different types of ways to play, whether it's standard Wall Street or in this space. If you are more of a day trader kind of thinking, you can make a hell of a lot of money at the top of this list. By every 7 days, you pull it, put it in, put it out, and you do it with multiple protocols. That's where you're making 500% return on your money. But you got to really, really be careful how you do it.
Yeah, if I had more time, I would be interested in doing that, because, you know, to me, we're not trading, you know, so we're not jumping in and out like day trading type of thing, but we're just
Yeah.
involved in that liquidity. But, you know, if we can jump in and out, you know, of the newer ones that have those larger APRs, you know, that could be a good place to play for sure. Yeah, so then like you said, we scroll down, we get the lower APRs, but the higher liquidity, you know, type of thing. So kind of an inverse relationship there for sure. Okay. So we've got a question in chat. Locking 10,000 cake for a year gives 11,000 K. Worth the risk? You know, if that's all your funds, I would say probably not. If that's, you know, 5% of your funds, then that might be more interested in you know, in doing that. To me, in a year in crypto is just kind of like, it's kind of hard to fathom. Thinking in terms of a year. I don't know. What do you guys think as far as that goes? All right, nobody wants.
What do you mean by that, Brad? A year?
Well, I mean, Ahmad asked about locking up, you know, 10,000 cake for a year, you know, and is it worth the risk? And just a year is a long time frame for cryptocurrency.
It's a really long time.
Yeah.
A lot happens during that time.
Yeah. So I mean, in regular terms, it's like, to me, it's like 5 to 10 years in the stock market.
Absolutely.
And, you know, kind of thing. So that's
absolutely. Yeah, to me, this right now, it's a fast-paced space, very fast-paced. So the space itself is moving. It's very fluid as to players coming in, players going out, things happening that are inappropriate, right? All kinds of stuff going on here. It's really volatile. And so to play within a very volatile space, you need to be moving quickly in, out, and don't be thinking in terms of long-term for anything until this thing is a hell of a lot more stable, maybe in 5 years, 10 years. But for now, it's a short, quick play. It's not a long play.
right.
In time.
Yeah. And like, and diversify as well. I'm sure you know, you don't have, Ray, all of your funds in one of these at a time, you know.
Yeah, and
maybe.
that's what I was saying, you know, when you said, hey, we could talk offline. If I shared my screen with a spreadsheet, you would see a spreadsheet that even though CoinMarketCap had a list of 217 protocols being websites that have pools and farms, I sorted that out, went into every single one of them. There's really only 79 that actually have pools and farms. So out of that 79, sorted by the ones that have the highest return, yes, what you just said is accurate. My intent is to diversify across 10 to 20 of those different protocols.
Perfect.
And work with the highest rate of return on each one of them. So if each one has a pool, let's just say the first one has a high 500% on one. So then I go to a different protocol that also has maybe 500, 600%. Then you go to the next protocol that has its highest percent, go to the next protocol that has its highest percent. And then you just move in and out of those highest percents within the top 10 to 20 protocols. And that's where you make a hell of a lot of money. But
Right.
it's a job, like what you said a minute ago, Brad, you don't have the time for it. A lot of people don't have the time for it. But it is a job that you have to be working at every single day. You got to watch what's going on. Like you were surprised just now that your thing dropped, right?
Oh,
Right.
I wasn't surprised because it's been coming down, but just, you know,
Yeah, but it
look at
dropped
that.
even more.
It kind of hurts. Yeah. Yeah. But
Yeah,
it's, you know, it is what it is.
hurts.
The nice
Yeah.
thing is you know, I'm still earning more VVS tokens all the time. So even though the value of VVS and Crow has come down, I'm earning more VVS, you know, today, tomorrow, next week. And because I'm in it for the long term, I'm not trying to, you know, pull those funds out to make a car payment or something like that. So.
And there are, like in Wall Street, different strategies. Currency trading has different strategies, and this has different strategies.
Yeah. Yeah. Okay. Let's go on. I know, Allegra, I think you had a question. If you want to jump in there.
That's okay. Honestly, I was just going to put something in chat. In my opinion, I would say the liquidity and just looking at it as a 10% return for Ahmed's question on Cake, probably not worth it. But for 10% interest, I think it could be better.
Yeah. Well, no, he was going to earn the 11,000 off the 10,000 because right now it's a little over 100% return.
Oh, okay.
So, you know, maybe 10% a month type of thing.
That's not bad. Yeah.
Yeah.
And something that hasn't been mentioned, even with what Allegra just said, I don't think you've used these words yet. They're paying daily. So when you see, let's say even 100%, let's be more conservative and go down to the 100% return. Well, that's a APR per year, but you divide that by 365. So on a 7-day, you're getting a daily return by taking that 300, whatever that APR is, dividing it by 365, and then that's 7 days. That's the kind of return you're looking at. So you think about this stuff a lot differently. And that is what the excitement and the beauty of decentralized finance is all about. You can't do that on the stock market. You can't do that on bonds and, you know, mutual funds. But here you get literally, it's paid daily. And so true farming is in and out looking at those daily returns. That's how you get an incredible amounts of money being made here. But you got to know how to use it. That's what we're talking about.
Yeah. And don't just sit on it while the returns go down and potentially the coin goes down in value, because that's
you have the coin goes down, and then you have that sorry, I'm going to go blank, dyslectic moment here, the imbalance between the two on a pair.
Oh, right. The impermanent loss.
Yeah,
right?
The impermanent loss. So you have the impermanent loss situation. You got to keep your eye on that, because the minute that thing starts coming into play, you got to get out of it.
Yeah. Yeah. But it sounds like your strategy takes that into consideration. You're watching it, you know, day by day, as opposed to I do this VVS finance, check it a couple times a month, you know, type of thing. But Michael's made an interesting comment in chat here. So let me just read it. If you guys didn't see it, something to consider is your time frame. I have Bitcoin I held since 2017. A lot has happened, but my return is roughly 1,500%. So holding a year might be worth it, even with the crazy ups and downs. Yeah, Michael, that's, I know what you're talking about. We can still benefit from being in the pools and farms, but not from the day trading that I've done with the trading bots, where I know with those, you know, I made, I mean, some of the coins I got onto with the trading bots ended up going up 20% over, you know, a week or two, but my trades ended up being negative. And I'm looking at it going, wait a minute, if I would have just held the coin itself and not been trading it all the time, I'd be in better shape. So that's something to consider when your other option is a trading bot. But with the pools of the farms, we at least are still holding, you know, and have a position in those coins or tokens like you do in Bitcoin, probably in a cold wallet. So we can benefit from those you know, long-term gains, but we still can get some other earnings along the way. So yeah, any other thoughts there, Michael? Oh, I think you're still muted.
I was
Okay.
just pointing out that, you know, if you're going to lock that up instead of the day or the 7-day, that, you know, if you lock it up for 3 months or 6 months or a year, you know, you can, even though with all the volatility that we have in crypto, there's still really good gains to be made. And so perhaps it might be worth some of your portfolio to put in these locked up 1-year situations, right? The scenario seems like it might pay for you if you're getting, you know, something 30 or 40 or 60%. That seems like it would be worth it to lock it up for that time. That was my only point, is that, you know, you got to figure out what your time frame is. It sounds like Ray is looking at something like a 7-day time frame, whereas some of us, like myself, you know, I knew when I first bought Bitcoin, I was going to hold it for at least 3 to 5 years minimum. So my thing is, I'm going to hold it for another 3 to 5 years, and we'll see where we're at that point in time. But anyhow, that was really my point. It's just that, you know, holding it for a year, while it might be scary because of the volatility, it still might be worthy, because if you can get 50 or 100% return on the year, 10,000 into 21,000, that seems like a reasonable risk. I mean, your risk reward ratio is pretty freaking good.
Yeah, and he doesn't need to lock up all of that. You know, one option, if he's got the 10,000, he could lock up, you know, maybe 4,000 for a year, 3,000 for 3 months, and 3,000 for 6 months, or whatever the options they had. And then if it was going okay when the 3 months was up, maybe he rolls that into a year. And so now that's going to, you know, come due 3 months after his initial 1-year deposit type of thing. So you can kind of stagger.
You're not going to run all of your capital, and you're not going to, you know, all you got is 10K. You're not going to just plunk it all down in one shot. That's kind of silly. But you know,
don't you also have to be cautious? Don't you also have to be cautious about talking about it in terms of dollars versus talking about it in terms of the coin that you're locking? Because you're not going to be making interest payable in US dollars. You're going to be making interest, in air quotes, interest in some other coin that has a different value, and that value is volatile. So while you may have put $10,000 into some coin that got locked up, the coin itself is the challenge. What it's worth at the end of the year versus the so-called interest that you're making in some other coin, and what it's worth at the end of the year.
You have to create a spreadsheet. You have to create a spreadsheet of some kind that has the different coins you're involved in, what their values are, and then what their fiat value is, hard cash value. And so it's very easy for you to look down your spreadsheet and say, well, I'm invested in these coins, these tokens. This is what their value is, and this is what their actual hard cash value is, American dollar value is. You just keep track of that. But what Michael was saying a second ago, and I think Brad, you were jumping on it as well, is that this is just like Wall Street. You want to be diversified. There's so many different ways of investing in Wall Street, from bonds to ETFs to mutual funds and all the others, without going down the whole list. This is the same thing. You do some farm stuff, some pool stuff. You go across a couple of different protocols, but you also invest in the actual coins. You do, you know, the different coins themselves. So you put money there, you leave it. And so there's different ways of doing all this. And then you got the NFTs, which is another long story, but you know, there's stuff over there. And so you put some money over there for a while. So yeah, what you were saying, Michael, is that I see both sides of it. There, you have a certain part of the portfolio is in the quick 7-day stuff, but other parts of the portfolio stay in the long-term stuff. That's how you diversify it.
Yeah, good, good. Okay, yeah, any other thoughts on that or questions on what we've gone over? We got still a little bit of time left. I'm sure there's other questions. Let's see. Mike, what questions do you have? I know you've been working at this for a while and looking at different things.
Yeah, it's pretty interesting stuff. I think I'm gonna get into that and start messing with it. I like the way it's got the bigger returns on it.
Yeah, and you can get started, Legra asked, about small amounts, and, obviously 50 cents wouldn't make sense because we're going to get eaten up in transaction fees, but you could do it with, $50, $100. It doesn't have to be $10,000 or $50,000 kind of thing.
Right.
So that's the nice part of this. Just go in and, play. There was, but got to start somewhere. So
That's right.
figure maybe throw a Starbucks coffee worth of B&B, at each one or something, and kind of build from there. So good. Okay. Let's see, Jason, you were unmuted. Any comments? Let's see. Okay. Or Wendy, just unmuted. Go ahead, Wendy.
Oh, yeah, I was just mentioning, about the value of the coin versus
Right.
the, percentage that you make. It's not in dollars that you're making 100% a year, it's in the coin. And it could be more than 100% if the coin goes up, but less than 100% if the coin goes down.
Right. So definitely to consider that for sure. Yeah. Okay. Has anybody used any other exchanges and farms besides the ones we've talked to? There's always new ones popping up, and so I'm always kind of looking for new ones. Again, not that I have time to get into them, but I know the VVS here I kind of stumbled across. I was helping somebody I think actually buy VVS or buy the crypto, and so he showed me what he was doing. I forget how, but I kind of literally just stumbled across this one and was happy to be making that 1,400% for a couple of weeks, type of thing. So any other ones you guys have run across? Yeah, Anthony, go ahead.
So one note I would like to make, and it just depends on kind of which direction you're looking at with the cryptos that you're purchasing. If you're looking at, actively making, pretty sizable returns in the right now, then, these liquidity pools and these farmings are great ways to do that. The other side of it to keep in mind also is if you're actually invested in the crypto itself, like, some people are very, very adamant about certain cryptos, like specifically like BNB, Cardano, Ethereum, something like that. If you're actually invested in the crypto itself and you feel like there's fairly large growth potential within that crypto itself, sometimes what the better thing to do is actually to lock up your liquidity through staking on their network to actually provide that stability for the network to help build the network over time. Because when you provide the funding through a liquidity pool, it's helpful, but it also tends to pull from their network. It provides the liquidity through a third party, but it's not directly through the blockchain itself, which can kind of pull away from the actual on-chain liquidity and make the metrics lower.
Okay, interesting way of looking at it as far as supporting the coin or chain directly. Okay, yeah, I hadn't thought of that part, but that's good. What kind of returns have you seen in staking directly like that?
It really depends on the coin. I'll be honest, most of the major coins, you don't see as much return, but if you do the staking through some of the smaller cap coins, you get a lot better return. One of them was not XRP.
XLM, like Stellar?
No, it wasn't. Well, Stellar had really good return originally. And if I remember, last few months, it dropped pretty substantially, but there was one, Impact XP. That's what I'm thinking of. Impact XP would say last year had really good return on staking within their own ecosystem. And granted, this isn't the best example given what's recently happened, but say like Luna. Luna token gave an unparalleled return. Granted, it was unfeasible over time. But looking at certain ecosystems and looking at how they're actually running their coins, if you believe in the coin itself, some of them can provide really good returns. Honestly, I mean, Cardano, I like their return doing their actual on staking pools within their chain, even though it's not a huge return for crypto. Overall, it's more than you tend to get from staking on other networks. And there's usually not a lot of, at least from what I've seen, there's not a lot of trade pairs that you can do for liquidity to get a better return. So, I mean, 5%, not great, but better than most exchanges.
Yeah, and it's better than nothing. If you're going to hold that coin, for a year, 5 years, whatever, earning something's better than nothing too. So
Exactly. And from what I've seen, given current economy and everything else, if you're looking long term, you're not looking this year. You're not even looking 2023. You're pretty much looking like maybe 2025, 2027, somewhere in that range for things to kind of bounce back a bit. And so you might as well stake with something that gives you a decent return, but seems manageable. You can do these liquidity pairs and they can be really beneficial for like the smaller coins, like you were saying, where there's not as much liquidity. But when you're doing these larger cap coins, you really got to look at like what's going to be more stable, because otherwise you're going with these kind of like low end exchanges that need people to come in because they're not very stable.
good. Okay.
Right,
Yeah, that's a good point.
absolutely.
Good
I
point.
had a question. When you're
Yeah.
looking for a new exchange, what's a good, like BVS Finance, for instance, what's a good way to tell if they're legit, other than, I guess, reading the white paper?
For an exchange. Okay. So for example, you've got some coin that you're trying to buy, so you need an exchange to purchase it from. Is that kind of where you're looking at? Okay. So I would start with the coin market cap here. And do you have an example we can try? Like, coin where you want.
Go to exchanges and then go to spot
Okay.
or derivatives, either one. Now, those guys at the top, within that top 10, those are the players on exchanges. These are centralized.
Right.
But those are the main players right there. And if you go to derivatives, it's the same thing. There's more money in the derivatives, if I recall. There's more money moving in derivatives. Because if you look at that, Binance is doing 24 billion a day.
Oh, that's the daily volume. Okay.
Yeah.
Nice.
Yeah, and go to spot and should be less, I think.
Yeah. It's 25%.
yeah.
Yeah.
So
quite a bit less.
derivatives is where the money is. But to answer that question specifically, either derivatives or spot, these are the centralized exchanges that have the most credibility and are going to be around for a while and have very, very low volatility within that top 10 list.
For the exchange itself, right?
Yes. And
Right.
I think that was the question. I'm sorry. I think that was the question.
Yeah. No, we generally think in terms of the coin, but yeah, no, his
Right.
question was about the exchange.
Yeah.
So I was going to look at it from the standpoint of, let me just use what's the example? Theta is kind of a long-term one I've had, and hopefully it's still going to have a run here. So if I was looking at this coin, then I would click on market to see the exchanges that it was traded on. And then if you click on the exchange, then you can see what the exchange does. So here again, here's that same volume number that we saw for 24 hours. And then we see what they do. So this is a way you can kind of look at what that exchange is actually doing. Type of
And it's a
thing.
good way to get familiar with the exchanges and the currencies, just by clicking around like this.
Yeah, and you start seeing the same names come up.
Yeah, that's it. You start seeing the same names at the top.
And you're like, okay, as opposed to going down,
Right.
you
But you
know,
know what, on the currency side of it, Brad, when you were saying what you were saying, and I don't want to divert too much here, but I'm finding the higher returns on arbitrage opportunities. It's from 3,000 to 9,000 in ranking. So when you go to the top left corner that you went to, currently on CoinMarketCap, they're up at 19,000. What is it now?
yeah,
19,000.
730, yeah.
That constantly is increasing, but 19,730 currencies. What I have found, there is a sweet spot of volatility. And that's actually, for me, the way I like to work, that's where the opportunity is, in volatility. And so from 3,000 ranking to 9,000 ranking is where I have discovered the highest profits are. Very interesting.
In order to arbitrage the highest
For
profits.
arbitrage opportunities between the portals, protocols. So you'll have on one protocol, it will be at one rate, and another protocol, it will be at another rate. So you can get that arbitrage between the two of them, you can make a lot of money. The opportunities for the higher volatility, where the rates are different between the protocols for currencies, the most opportunities for the highest profits are between the rankings of 3,000 and 9,000 for the way I do it. That's my strategy. You know?
Okay, and so the arbitrage between the different exchanges, I think you called them protocols.
Protocols, it's because I'm working with protocols versus exchanges. You're right too. You can also do it with the exchanges. You can also do it with the exchanges. There's arbitrage opportunities between the exchanges as well.
But I mean, isn't that what the arbitrage is on a single coin between the exchanges, or you're arbitraging between different coins?
One coin, arbitrage between two different exchanges,
Right.
or two different protocols. To me, by the way, the word protocol refers to when they are farming and have pools. Exchanges is when you're actually doing currency trading.
Right.
And futures, options, spot, derivatives, all that's on the exchanges, where the protocols only do farming and pools. I'm sorry, Michael. Go ahead, Mike. I'm sorry.
No, I just want to be clear. When you say 3,000 to 9,000, you're talking on this list of 17,000 or 19,000 different currencies.
Yes.
That's somewhere between the 3,000, the number 3,000 currency and the number 9,000 currency. That's your sweet spot of trading. Those are the ones that have the right level of volatility, but some level of stability, if that's indeed not an oxymoron.
I'd even say no stability, and I'm happy.
Okay. All right. But those are the ones where you find that you get the most return bang for your buck. Your risk reward ratio is greatest among that group.
Yes. And there's more, and there's more of them.
Sure.
The frequency is higher.
Okay, so you're literally scrolling down this list to, page 101. So jump over there and see where we're at. Okay, so now we're down to the 10,000. Yeah.
Yeah. And I didn't get, and I didn't get it necessarily this way. I have another way of getting it. But what I do is I go to Etherscan. You're familiar with Etherscan? So you can see, and I won't get into all the details, but I have ways of finding completed arbitrage trades. And then when I see those arbitrage trades, I have another spreadsheet that has thousands of those on it, without an exaggeration. There's several thousand successful trades. And what I do is I look at the currencies that were involved in the trades. And then I have sorted those. And then I put a ranking. I took the time, took a week to do it, where I took every currency, went on to CoinMarketCap, found its ranking, and then sorted it by ranking. And that's when I saw it just popped right off the page. Holy crap. The majority of the money is being made between 3,000 and 9,000, and the frequency of the successful trades that are making the big money are there. It took me a week to do it. It's a lot of work.
Yeah, and that's that's the fascinating part about crypto is we can look at all those transactions.
Yeah, it's all open source. Yeah, it's open
Either
source.
scan or BNB, and yeah.
Yeah, and there's a bunch of scans out there, Polyscan, and there's a whole bunch of, every one of the chains has got its scan site like Etherscan. And, but yeah, it's all available and you can see it and figure out what the hops and the swaps were, hop between the protocols, hop and the swaps between the currencies.
Yeah.
And sometimes a lot of money is made, and I don't want to divert because we're really here today just talking about PancakeSwap, but there's ways of doing it that where you make a lot of money at the 3,000 to 9,000, and you jump multiple protocols and you do multiple swaps between the currencies.
Got it.
Within one trade.
Crazy. Okay. Oh, crud. All right, I added a couple links here, and I'm going to include this one under getting started. I know we've probably has some folks that are a little newer in crypto, and this is my page, and people have always asked me, well, what's a good wallet? What's a good exchange? Or they'll say, hey, is this a good one? Is that a good one? And you can't keep up with all of them. So I finally put together this list of ones that I've used. This is basically covers wallets and exchanges. So rather than trying to answer everybody's question, I kind of direct them to this page and say, if you want to get started, here's kind of what I recommend. And I go through and give you a reason why on each of them. So hopefully you have a little better background on them too. So I'm going to have that there. Also going to share let me stop sharing this and swap this. And then too many things going on. And then let me share this with my contact info. If you guys want to reach out or anything there. If you guys want to share your contact info, you can do that in the chat room or on the Google Doc. But any other, kind of last minute questions or little pieces to the puzzle that you need to make all this work?
If you want, Brad, I know if you're wrapping up, maybe you don't have time, but I could share screen on that spreadsheet, you can see it real quick.
Oh yeah, just to kind of get an idea there. Let me stop sharing mine. Let me share. Here's a little bit. Yeah, go ahead. You should be able to share away now.
I do this.
And then I think there was another question in chat. Let me find my chat window.
This one.
Where?
Now, are you guys seeing the spreadsheet?
Yeah, we got it now.
Okay. So at the top, I put Uniswap because Uniswap is a major player. It's a long story, but there's a lot going on with Uniswap. But then if you look at column H right here, I just stumbled into it. This took me 3 days, 10 hours a day to create this spreadsheet. But right here, this particular one here, this is a protocol. All they do is pool, farm, and stake. They do nothing else. And swaps. But look at the return on one of them. But yeah, the return is 3,800, but there's probably only $1,000 in that pool. But then they got another pool, there's another pool, another pool, another pool, and these are the different rates of returns on those pools. And yes, the pools do not have a lot of money in them. But if you're playing the day trading game or the 7-day trading game, you can make a hell of a lot of money off of this protocol. But then as you go down the list, it's the same thing. You go different protocols who only do pools and staking and swapping. I didn't bother putting the words swapping in there. You'll see the different percentages. And these are the percentages of the highest pools, the pools that they have currently active that are paying the highest rates. But they have also several other pools, and these are the rates going across that they're paying. So what I did for the heck of it, for me, and this is just like a quick note to myself when I highlighted this in blue. When you're up here, it's highly volatile. they could be gone tomorrow. You could put money, like you said a minute ago, $10. Don't put your whole life savings into any of this stuff. It could be gone tomorrow. So what I did is I came down here and I said, well, I don't know, what the hell? Let's just try under 600% for the highest return on one of the pools. So it happens to be this protocol. But it's interesting that Pancake is right in here, because Pancake currently in its farms, this is the numbers they've got. So I thought that was kind of interesting. But then again, I got this list and just keep going down it and you see all these percentages. And the other thing that I just wanted to share with this spreadsheet, again, this came from CoinMarketCap. It came from the DEX, Decentralized Exchange List. And if you look all the way down, I'll just scroll real quick. It's kind of like, I wonder who the heck is working for CoinMarketCap and how these things get put in. Down here at the bottom, 219. So there's 219 of these, but several of them are not in the United, you can't use them in the United States. I found a whole bunch of them on CoinMarketCap. It's a bad website. It doesn't even work. Some of them won't even launch, or when you go to the website, you realize there's nothing going on. So even though CoinMarketCap has it listed, there's nothing in the pools. There's no money. There's nothing happening whatsoever. And I even connected my wallet to it just to see, well, maybe it's because the wallet's not connected. So I connect my wallet and I still didn't see anything going on. So there's a lot of these websites that are dead effectively. Somebody launched it and it's no longer active. And even though they have within decentralized, it says decentralized exchanges, within that list, there's a lot of them that are just pools, farms, staking, and swapping. But there were also some that didn't have pool farms. They were only exchanges, which means it's currency exchanging, it's futures, options, derivatives, spot. So even within their decentralized exchange list, where the majority of the sites are actually, in my mind, protocols doing the pool farm stuff, they had some in there that were really exchanges. So I took the time to figure this out. And then some are just swaps only. They don't have pools or farms going on. They only have swaps, which tells me somebody launched this thing and I don't know what the hell they're doing with it. They're just making money off of people swapping. So people who created these sites are doing a lot of different things with them, and who knows what the hell they're doing with them in some cases. So I put a line in here because this is my strategy. I don't want to work with a protocol that has anything under 100%. So I said, I'm not going to waste time with these guys down here because their highest returns, their maximum returns on any of their pools is below 100%, even though they are protocols that do have pools and farms. So, but up here, this is where the real action is up here. And my plan is to play in this space right in here. But then I got to go back through all these. Just so you know, I do have to go back through every one of these. And what some of the questions that came up today, you have to look at these and really look at the credibility of these. Are these people going to be around? All that kind of stuff. There's something else that's really important. As I took the time to go through all of these different protocols, a lot of them in my mind, a whole bunch of them are being launched by the same people, because they look exactly the same, And I'm thinking, I remember in the days of when the internet first started, one of the strategies was to have 5 or 6 websites for the same company, whatever product or service, they got the same website. What they're doing here in this world of protocols is there's players that are doing the same thing. They're launching the exact same websites, but they're just giving different names. And so even though it's, whatever they got here, these different names for these different protocols, it's the same player that's launched 5 or 6 different protocols.
I think, let me just jump in on that. I think what might be happening there is that you've got people stealing the look and feel of another website, literally stealing the source code of the site and then launching it themselves. And it's really easy just to copy somebody's website and then launch their own thing. So I would be leery of those in that, they just stole somebody's look and
Well,
feel
it-
for the
well,
actual
it-
site, but then the background that, they're just out there to steal your funds, or they're running legit for 30 days, 60 days, and all of a sudden they're going to do a rug pull.
I agree. I agree with the rug pull part of it, but on the stealing the site, remember, you got to get the code. So you got to be able to download the actual code, which is the smart contracts. You have to be able to download that. So there's two. My thought is that it's either the same player launching multiple sites, or there's a white label player. Because I've already found two different white label players who have protocol code, and you can buy it off the shelf, and they just give it your name, give it your colors, put your images on it, but it's the exact same site. There are white label players selling white labeled protocols and to different people. So it's either that and somebody buying one of those white labels and launching 4 or 5 different sites. And I agree that bottom line, there could be some rug pulling involved as well.
Yeah. So just to be cautious, because you can't go to the Better Business Bureau or the SEC or things like that on these. So,
No. And just for other people on the call, Brad, rug pulling is basically setting up shop and then walking away, taking all the money that was deposited and just leaving, stealing the money. That's what rug pulling is.
Exactly. And I'm glad we included that. Yeah. So that's the worst for sure. And again, that's why we want to stick with the bigger players on each of the chains is kind of what I do. Now, when you're looking, you've got everything sorted here, and some of those smaller players may be playing, paying out better returns. So there's that spectrum.
Yeah, and so there's a mindset based on who's listening to this today. There's multiple mindsets. There's one, get on top of them. You control it. They may be taking advantage of people, but you can take advantage of them. And the only way to take advantage of them is in and out quick, because expect them to leave, and don't put a whole lot of money into any one of these that's at the top of the list here. This has got to be small amounts of money at the top of the list. And because expect a rug pull. That's my mindset is in these lists in these players that have these high percentage returns, I'm expecting a rug pull. I got to think about it that way. And so you don't leave a whole lot of money with any of these people for any length of time, but for the short time that they're around, you could potentially make a hell of a lot of money.
Yeah, good. Okay.
I'll leave it at that.
Okay, thanks. It looks like Anthony's raised
I
his
don't know
hand.
how I don't know how to get out of share screen.
Okay, I'll work on that. I think I can stop. Yeah, I'm going to stop your sharing, and then
Thank you.
Go ahead, Anthony. Yeah, and thank you for sharing that, Ray. Definitely.
Okay.
So a question I actually had based on what Rick was saying was, what would be your guys' thoughts on, since, a lot of these pools are, you should be expecting a rug pull, like you were mentioning. What are your guys' thoughts on doing a slightly larger amount than if you were just to do it in one of these liquidity pools that's high risk, and spreading that risk across multiple platforms like that are high risk? That way, if one goes down, you still have, 4 others that the money's spread across. And as you start to see any kind of like concern of collapse, you pull out of all of them.
That's exactly how I'm playing the game. There has always been, in currency trading, in horse racing, any of these types of spaces, is you always spread it across as many different players as possible. There's what's called win-lose, right? And actually that's even in stocks, it's in mutual funds, it's definitely in hedge funds. You're going to have losers, you're going to have break evens, and you're going to have some wins. And so if you diversify across 10 to 20, in this case, protocols, some of those are going to do rug pulls on you. You want to hopefully get out of there before a lot of money is lost. And so in normal investment strategy, win-lose, you are hoping that with those that you win with, you can make a decent return. You can lose 60% So if 60% of the players you lose money with, hopefully the other 40%, there'll be some break evens and there'll be some profits. So you have to rise above the situation, and you got to play the game on top of them with that mindset.
Good, good. Okay, thanks, Ray. Yeah, any other last minute questions, guys, and we'll call it a day. This has been some good info. Good info. Okay, well, we will meet next month. I don't have a date yet, but we're definitely going to avoid the 4th of July weekend. So we'll probably be looking at that next weekend. And as always, if you have any suggestions on topics, shoot those to me and we'll try to get those going. And if you're in the Fresno, Clovis area, look at, we'll be meeting in person again, July, I think it's the 3rd week in July or so. So with that, there's one more chat. I think just make sure we didn't miss a question here. All right, thanks, Michael. And the recording will be up on our YouTube channel. If you go to videos.fresnobitcoin.com, you can get to our YouTube channel. It'll probably be this afternoon, this evening, as far as today's recording, but all the previous recordings are, there from previous months.
Just a quick
Thanks,
thought,
Brad. Thank you. Thank you, Brad. I appreciate
Thanks,
you
Ray.
taking the time to do this.
Go ahead, Anthony. I think you had a quick comment or something.
I was just going to say just a quick thought on possible topics for the next time around. I know we kind of touched on this with a previous one, but what about doing deep dives into specific cryptos? Like learning, like kind of going over some of the key metrics, best places to find the information, that kind of stuff.
Okay, on a specific coin or token.
Doesn't necessarily have to be a specific coin or token, but using it more as an example. Like, we're going to use one to show how to do a deep dive on some of the key metrics and figuring out, like, if you have a coin, say like HNT, where that one has a specific use case, being able to kind of break it down and identify like, oh, this is the reason why this may go up. And these are some of the risk factors with this specific coin.
Got it. Got it. Okay. And I'm thinking you might be a good person to help with that kind of presentation.
Yeah, I'd be happy to help in any way I can.
Okay, great. Let's maybe connect offline and, go from there. Good. Okay. Yeah, no, good discussion. That will help a lot of people. So that's a good topic for sure. Okay. Dale asked, what is the YouTube? I set up this link for our YouTube channel. Let me post that again in chat. Again, it's basically videos.fresnobitcoin.com, and that will forward you to our YouTube channel. All right, guys. You guys have a great rest of your day, and feel free to reach out to me individually if you have any questions or comments down the road. Take care.